Now, Governor of the Central Bank of Nigeria, Godwin Emefiele, says the pace of economic growth remains fragile as he laid out CBN's policy direction for the next 5 years.
Our vision for the next 5 years. Fellow Nigerians, a few weeks ago, we held consultations with some banks and business leaders in the private sector. We thank them immensely for their thought-provoking ideas and counsel. We intend to sustain the pace of those consultations, as these would act as barometer for measuring the progress being made in the implementation of our policies. Our assessment of the outcome of that deliberation shows that with concerted efforts, the challenges facing the country are easily surmountable. Consequently, working closely with our fiscal authorities, we pledge to target a double-digit growth by the next 5 years. And at the CBN, we commit to working assiduously to bringing down inflation to single digit, while accelerating the rate of employment. Put succinctly, our priorities at the CBN over the next 5 years are the following. First, preserve domestic macroeconomic and financial stability. Second, foster the development of a robust payment systems infrastructure that will increase access to finance to all Nigerians, thereby raising the financial inclusion rate in the country. Third, continue to work with deposit money banks to improve access to credit for not only smallholder farmers and MSMEs, but also consumer credit and mortgage facilities for bank customers. Our intervention support shall also be extended to our teeming youth population who possess entrepreneurial skills in the creative industry. This group deserve our encouragement. We shall also, during this intervening period, encourage our deposit money banks to direct more focus in supporting the education sector. Fourth, grow our external reserves. Fifth, support efforts at diversifying the economy through our intervention programs in the agriculture and manufacturing sectors. We are confident that when implemented, these measures will help to insulate our economy from potential shocks in the global economy. In my second term in office, part of my pledge is to work to the best of my abilities in fulfilling these objectives.
Yeah, that was the Central Bank Governor of Nigeria, Godwin Emefiele, talking about the policy direction for the next 4 years. But still at that press briefing, he also mentioned plans for the foreign exchange market and also for the banks.
On this call, we will continue to operate a managed float exchange rate regime in order to reduce the impact which continuous volatility in the exchange rate could have on our economy. We will support measures that will increase and diversify Nigeria's export base and ultimately help in shoring up our reserves. While the dynamics of global trade continues to evolve in advanced economies, Nigeria remains committed to a free trade regime that is mutually beneficial, but particularly aimed at supporting our domestic industries and creating jobs on a mass scale for Nigerians. We intend to aggressively implement our 500 billion facility aimed at supporting the growth of our non-oil exports, which would help to improve non-oil export earnings. We would launch a trade monitoring system, TRMS, in October 2019, which is an automated system that will reduce the length of time required to process export documents from 1 week to 1 day. This measure will help support our efforts at improving our non-oil exports of goods and services. We will also work with our counterparts in the fiscal arm in supporting improved foreign direct investment flows to various sectors such as manufacturing, insurance, and infrastructure. These measures, while supporting improved inflows into the country, will help to stabilize our exchange rate and build our external reserves. On financial system stability, a resilient and stable financial system is imperative for continued growth of our economy, given the intermediation role that financial institutions play in supporting the needs of individuals and businesses. As a result, we will continue to improve our on-site and off-site supervision of all financial institutions while leveraging on data analytics and our in-house experts across different sectors to improve our ability to identify potential risks to the financial system as well as risks to individual banks. In the next 5 years, we intend to pursue a program of recapitalizing the Nigerian banking industry so as to position Nigerian banks among the top 500 in the world. Banks will therefore be required to maintain higher level of capital as well as liquid assets in order to reduce the impact of an economic crisis on the financial system. With the rise in digital payments and cyber security threats, we will develop a robust mechanism that will help ensure that the necessary safeguards are put in place by banks and financial institutions to protect against loss of data, fraud, and cyber incursions in their respective systems. A robust payment system infrastructure. An efficient payment system is vital to the effectiveness of monetary policy interventions. It also helps in reducing the cost involved in payment for goods and services. The Payment Services Management Department in the CBN will work to enable the build-up of a robust and secure payments infrastructure in Nigeria that is reliable and easy to access. We will reinvigorate our efforts at driving cashless initiative across the country due to immense efficiency gains that will be derived from it and the impact it could have on our financial inclusion drive. Given Nigeria's large size and the cost involved in building bank branches across the country, the Payment System Department would support the spread and utilization of digital modes of transactions so that every Nigerian will have access to financial services.
That was the Central Bank Governor of Nigeria, Godwin Emefiele, there giving the policy direction for Nigeria. And I have with me in studio now Steve Osho, is the co-managing partner at Comercio Partners. He joins me to analyze some of these decisions from the Central Bank of Nigeria. Thank you so much for joining me on the show, Steve. All right, but I'd first like to get what your own key takeaway has been so far from hearing this policy direction.
I think for me, if we could take away from the policy directions actually been on how they intend to stabilize the macroeconomic and financial sector, and probably around the digital payments and how they want to improve on that. Then how that will actually affect the financial inclusion that the CBN has been driving for some time. And again, on how they intend to actually work with the deposit money bank to extend credit to real sector. And if you tie all these things together, I think it's actually a very strong policy trust that if it's well maintained and well, followed through, it's going to actually move us from the present situation that we have in terms of reducing the poverty level, increasing the financial inclusion, at the same time position the banking industry to be able to compete among the top 500 banks in the world, which we actually need right now.
All right, then we'll get into some of those in detail. But first, for me, I think it's also important that we have a clear policy direction from the central bank so there's no ambiguity on what they're going to do or what they're not going to do. They put it out there in black and white, plain for everybody to see. But for me, one thing that kind of strikes me or comes to mind is, the heavily criticized managed flows that we've been running for quite a while now. When you look at how that has been, people have different viewpoints to this, but I'd like to get your sense of, how we've fared so far since this has come on board, and how you see this playing out going into the future.
I think the major problem actually been the way multiple rates people have been talking about how the exchange rate has actually been managed for some time. If you look at the news that came out on Reuters and Bloomberg a few days ago, where they were talking about Nigerian central banks actually trying to remove the float management of the currency. I think the major problem there is the transparency in terms of which rate is applicable. Is it the official rate or is it 305 or 306 rate? But they've come out to tell you that they don't have multiple rates, but they have multiple windows, which you actually can assess the effects. Everybody knows that official rates actually been very stable for the past some time. And if you look at where we're coming from after the crisis we had in 2014, 2015, which actually caused the currency to actually trade as high as 520 naira to $1. And the way they actually managed to actually bring that back to around 360, 362 levels in the high-end window. I think we need to give them some kudos, and we need to give them some recommendation on how they manage that over time. I think going forward, they've actually made the policy very, obvious. And like you said, there's no ambiguity about what the plan is going forward. They want to maintain stability of the currency going forward.
All right, then. Also, another very interesting one is the recapitalization of the bank. We've seen how we've had a devaluation in the past few years, and how that has affected how that has kind of played out so far with the currency. Then looking at the wider picture and how it affects the financial institutions with the banks, I think it's a very, very good move, on the banks to think about recapitalizing the banks at this time.
Yes, I think it's actually the good move. Like I said, if you look at the entire policy trust, actually looking at, which was rolled out by the central bank governor yesterday, I think is actually moving us in the right direction. Right now, if you look at the top 500 or top 1,000 banks in the world, you can't see any Nigerian bank in that list. I think the closest you have is probably Standard Bank or maybe Rand Bank and the Absa Group, which are actually occupying between 120 and 200. So I think it's high time we started running or pushing our banks to get to that point where we actually can compete regionally and we can compete globally among other banks. And if you look at how we've actually fared over time, if you look at the last time the recapitalization actually was done for bank, about 10 or 15 years ago, we're talking about exchange rate about 113 naira to $1, 119 to $1, maybe highest of 120. Now we're talking about 360 to naira to $1. So you've seen that that's somehow the depreciation of the currency has reduced some of those capital base that some of these banks had. And for them to be able to compete aggressively and competitively in the regional space, I think it's high time they increase the capital base of some of these banks.
All right, then. Moving on, still on the banks, though, and looking at payments now, because we saw that the central bank governor was quite heavy on that, talking about the fact that we're going to get a new payment infrastructure coming soon, and the anticipation of all of that, setting very ambitious targets for financial inclusion as well, talking about the sense that we're trying to get about 95% people, getting into the financial system by 2024, when the policy elapses. Well, when you look at all these ambitions, though, how possible do you think this is to achieve?
I think it's possible. The only thing they'll have to look at is how you want to use other means apart from using the banking sector, to harness this growth. Because what you're saying is that we're trying to look at for the unbanked sector of the country, of the economy. And if you have 95% of the populations are actually sitting down there, and just 35% of the population is actually banked, and you're trying to say we have 95% of the adults that's supposed to be in the banking sector, how do you actually bring that in? And if you look at the rural area, most of these populations sitting in the rural areas are actually unbanked. So how do you want to harness this development? I think looking at the way to improve the digital payment, moving from just the normal cycle of just going to the bank and opening an account, and look at the way to actually make payments, digital payments, or using the USSD code to actually make payments and stuff like that, would bring in the financial inclusion that we are looking at to actually achieve. And I think, like I said earlier, is the right step in the right direction.
I also agree as well, because when you look at the way our economy is structured, we have so many people not playing in the formal economy. Exactly. We have so many people who have never had the pension plan. Exactly. People have never even played into the mortgage space. Exactly. And it kind of brings me to the other thing the central bank is trying to do, that's catalyzing consumer spending and then the mortgage industry, talking about the fact that they're going to announce a framework later on how they're going to use both the capital markets as well and the banks to drive that. I'd like you to hear your thoughts on this.
I think that's actually another good policy trust. The problem I have about all these things, especially when it comes to this mortgage and all the other things we talk about right now, is how the CBN is going to come up with that framework and the timing of that framework. Don't forget that the central bank governor actually has the next 5 years actually to make this thing happen. And the present regime has the present
Government has 4 years.
Government has 4 years, to get these things together. And if you look at the way the bureaucracies of actually getting policies trust out there, how it works in Nigeria, I think that's my major challenge. In terms of getting this out, if you want to extend credit to the smallholder farmers, if you want to extend credit to the rural community, if you want these guys to be able to access mortgage and facility credit from banks, and you're looking at actually putting this together to increase the capital base of banks too. So I think the policy trust and how the framework is going to work, going to develop, they talk about starting the, what they call that stuff, the trade registry, where they're going to reduce the export document from 5 days to 1 day. How are you going to do that? And implementation for me is actually the key, and how we actually moved fast to make sure that we put all these policies together in place, and we make sure that we work with all the stakeholders to make sure we achieve this on time is actually what's exactly paramount for me.
All right then. Thank you so much for your time. We'll keep our eye and see how they implement a lot of these initiatives they put out for. So I've been speaking to Steve Osho. He's the co-managing partner at Commercio Partners.